Hello and welcome to Earnings Central. I'm 20 trucks carrying humanitarian aid for war-torn Gaza start entering the region from Egypt via the Rafah crossing. Humanitarian groups call the aid a drop in the ocean. Over 4,000 people have been killed in Gaza and around 1,400 in Israel. US and UK urge India to not insist on reduced diplomatic presence of Canada, express concern over India's decision to remove 41 Canadian diplomats from the country. US asks India to cooperate with Canada in the probe into Hardeep Singh Nijjar's killing. Kotak Mahindra Bank delivers in the second quarter. Its net profit jumps 24% versus the same period last year. Strong loan growth aids profits. Asset quality remains stable, but margins see a higher than expected decline. RBL Bank beats estimates in the second quarter. Profits rise 46%, while net interest income soars 26% versus the same period last year. Asset quality improves. IDBI Bank also reports a beat in the second quarter, with profits rising 60%. Yes Bank misses estimates in the second quarter, this despite profits rising 48% on a yearly basis as other income rose and provisions fell. Asset quality remains stable. The bank cautions on some signs of stress in the unsecured retail segment. Kotak Mahindra Bank gets a new top boss, appoints Ashok Vaswani as its new MD and CEO for a period of 3 years. Mumbai's air quality remains worse than Delhi. Civic body BMC threatens to halt all construction in the city, orders 6,000 construction sites to install sprinklers within 2 weeks and cover the sites in 35-foot sheets. Gaganyaan test flight successfully lifts off from Sriharikota after a 2-hour delay. The test mission was to test the efficiency of the vehicle's crew escape system. This is part of a series of test flights planned ahead of the launch of ISRO's first human spaceflight mission. Well, in some breaking news that's just come in, Kotak Mahindra Bank has got a new MD and CEO to take over from Uday Kotak. The bank said it had received RBI's approval for the appointment of Ashok Vaswani as its new MD and CEO for a 3-year period with effect from his date of taking charge, which can be no longer than the 1st of January 2024. Now, Vaswani is the former CEO of Barclays Bank UK and subsequently became the CEO of their global consumer, private, corporate and payment businesses. Earlier, Ashok Vaswani was the CEO, Citigroup Asia Pacific, and member of Citigroup Global Operating and Management Committees. Uday Kotak, the bank's founder CEO, who recently stepped down from his position, said, and I quote, "I am delighted that the RBI has approved our recommendation. Ashok Vaswani as the next MD and CEO of Kotak Mahindra Bank. Ashok is a world-class leader and a banker with digital and consumer focus. I'm proud that we bring a global Indian home to build Kotak and India of tomorrow," end of quote. So an external CEO it is for Kotak Mahindra Bank, much to the surprise, I'd imagine, of the street, who was expecting one of the internal members to take over from Uday Kotak. Now, moving on, it's been a big day of bank earnings, and we've seen some common themes across the numbers that have been reported so far. While we're awaiting the ICICI Bank numbers coming in any time now, Kotak Mahindra Bank's numbers were slightly above estimates, while Yes Bank's bottom line came in below what the street had factored in. Both Kotak and Yes Bank saw some pressure on margins, but asset quality improved for both of the lenders. RBL Bank also had a strong quarter, a 46% growth in profits over the previous year, and IDBI Bank reported a near 60% rise in profits, 12% increase in net interest income and improvement in the asset quality, with gross NPAs coming in at 4.9%, net NPAs at 0.39%. So let's start with the big one, Kotak Mahindra Bank, which has just reported its numbers, and of course now the new CEO use. Abhishek Kothari is joining us from the Mumbai studio to take us through the fine print of those numbers. Abhishek.
Well, Ritu, as you mentioned, Kotak Mahindra Bank has reported strong set of numbers. The earnings are ahead of our poll on account of the robust business growth that they have seen. I'll come to that, but take a look. Between Q1 of FY21 to Q3 of FY23, the deposit growth of Kotak Mahindra Bank was anywhere between 6.6% to 13% on a year-on-year basis. Hence, now when the deposit growth is robust, it is coming in at a price and that's eating into their net interest margin. So what has actually worked in the results is that the deposit growth is robust at 23.3% YOY, one of the best that you are seeing in last 20 quarters on a YOY basis, and sequentially the deposit growth is at 3.8% quarter-on-quarter, but it's coming in at a price given the fact that CASA ratio is declining, the low-cost deposit ratio is declining, and the term deposit or other high-cost deposits are actually making up for it, which are coming in at a price in a rising interest rate scenario. Loan growth is pretty healthy at 18.5% YOY, one of the best growth that you are seeing in last 3 quarters, and sequentially, that is quarter-on-quarter, the loan growth is at 6%, which is one of the best in last 6 quarters. Now, asset quality that continues to improve, one of the best in last 8 years or 33 quarters or even more. Gross NPA ratio is now down to 1.72% when compared to 1.77% in the previous quarter. Net NPA ratio has also improved to about 0.37% when compared to 0.4% in the previous quarter. Now, the other part which is good is that the consolidated balance sheet actually is very good, because consolidated ROA or return on asset, that's improved to 2.68% when compared to 2.61% in the same quarter last year and 2.63% in the previous quarter. The quarterly profit of the subsidiaries, that's the highest ever that you are seeing at 1,232 crore. Now, what has not worked is that the net interest margin compression is higher than analyst estimate. Analysts were penciling in a 15 basis point decline in net interest margin, but the decline is 35 basis point. It's higher than analyst estimate. Now, slippages increased quarter-on-quarter. Annualized slippage ratio of 1.51% is perhaps the highest that you are seeing in last 5 quarters. CASA ratio, as I mentioned, people are switching to term deposit, so the CASA ratio is declining, and operating profit, that's declined by 6.9% quarter-on-quarter. Perhaps the first time that you are seeing operating profit decline in last 5 quarters. In terms of numbers, both the NI and PAT is ahead of our poll. Back to you.
Abhishek, thanks very much for taking us through that fine print. Joining us now on the show are market expert Prakash Diwan and Rahul Malani of Sher Khan to take us through the numbers. But before that, Prakash, if I could start with you on the new CEO appointment. It is not an internal member; it is an external member in the form of Ashok Vaswani. What do you make of? Okay, we have Rahul Malani with us, and we're awaiting Prakash still to join us. Rahul, what did you make of the new Kotak Mahindra Bank CEO announcement?
So basically, the market expectation was that it could be an internal candidate, but as you alluded right now, as per the press release, an external candidate has been appointed by the bank. So basically, now the expectations come as that what are all the growth and aspirational guidance from the new MD and CEO would be. The market would look at the new growth guidance from the new MD and CEO. And what all, whether there would be any changes in the organizational structure or not.
Okay, Rahul, stay on with us. The Kotak Mahindra Bank management is actually addressing the media on their second quarter earnings right now, so we'll listen into that.
It was a post-tax profit, whereas BSS, the business correspondent, which is into microfinance, got 108 crores of post-tax profit for this quarter. The domestic mutual fund entities clocked 124 crores of post-tax profit in this period. Our assets under management group-wide just short of 5 lakh crores with a growth of 28% on a year-on-year basis. The big growth for this year and this quarter has been on the offshore funds. This quarter, again, we got $1 billion plus raised in the offshore fund itself. And we now have the mid-cap fund, which is the largest India-dedicated active fund in the market. Kotak Securities continuing to improve its market share. From 5% a year ago, it is now at 8.8%, with cash market share at 10%. In the subsidiary lending activities, Kotak Prime grew the vehicle business at 31% on a YOY basis, whereas Kotak Investments grew the asset book by 50% plus during the year. And the capital adequacy at the group level, again, very comfortable at 22.9 overall and 21.9 at CET levels, CET1. The overall net worth of the group at 1,20,000 crores, about 90,000 of this sitting in the bank. The ROA for the overall group at 2.68 for this quarter, and we would close with this quarterly profits included. The book value per share would be at 605 rupees per share. So those were the broad highlights of what we did in this quarter. I'll give it back to Rohit.
Jaimin, congratulations for a wonderful result. Congratulations to Jaimin and Deepak also. Deepak, now I request you to make the major announcement, please.
Okay, thanks, Rohit and Jaimin. Well, with a 24% increase in profit after tax on a consolidated levels, you will note that the financials look balanced and comfortable across all parameters. And growth is pretty well rounded across most customer segments. Friends, we just released an announcement regarding receipt of the RBI approval for our recommendation of Ashok Vaswani as the next Managing Director and CEO of the bank. That's big news for us. Ashok is a veteran banker with a proven track record, initially at Citigroup and then more recently at Barclays. He brings with him significant experience in building both consumer and corporate businesses, particularly with a digital drive. And Ashok, if you see, until recently, Ashok was the CEO of Barclays PLC at UK, and he was global head of consumer banking and payments at Barclays PLC. Prior to that, Ashok was the CEO of Citigroup Asia Pacific, and he's been a member of a lot of Citigroup global operating and management committees, really. Ashok is president Pagaya currently. Pagaya is a technology company which he joined just about a year back out of the US, basically focused on AI technologies for retail credit. Ashok is on the board of the London Stock Exchange Group and the SP Jain Institute of Global Management out of UK. And Ashok supports various philanthropic organizations, including Pratham and Lend a Hand. From our point of view, friends, Ashok is basically Ghar Vapsi. It sort of fits into our overall broad theme, which we've basically been running for about a year and a half now, of getting global talent back to India and running our companies. And from our side, all the best to Ashok. Thank you, and over to you, Rohit, again.
Thank you, Deepak and Jaimin, for a wonderful walkthrough from the various announcements today. I request media to raise hands, and we will go one by one. So who's the first one? Shubhana Sheikh, please unmute yourself and ask your two questions.
Hi, sir. This is Subhana Sheikh from Informis Media. I wanted to ask, your slippages have increased. Could you help us, what particular segment saw the rise in slippages? And my second question would be on the SMA2, on the SMA2 side. That has also risen. If you could throw some color on that.
If you look at slippages, we were at 1,200 crores in the previous quarter, which has gone to 1,300 crores. So it's not a decently large amount there. But yes, we are watchful on certain segments, particularly on the unsecured retail side. But broadly, if you look at it, the overall growth on slippages for the quarter is just about 100 crores on a base of 1,200. So that, again, is not a large number. SMA2 actually for the quarter has fallen. We are now at 155 crores. A quarter ago, we were at 203 crores.
Thank you,
So
Shubhana.
apart from retail, any other segment that contributed to the rise in slippages?
Not really. As I said, the total absolute rise on a larger book, which has grown 6% during the quarter, we've grown from 1,200 to 1,300. So that's not such a big increase.
All
Thank you.
right, sir.
We'll come
Thank
back to you. Ankur, you can ask your question, please.
Hello, everyone. My question is regarding the appointment. First of all, congratulations for getting an approval from Reserve Bank of India. I wanted to know what happens to the chairman post. Has there been any approval which you have sought for chairman post as well from Reserve Bank of India? What is the status there?
Yeah, Jeremy, you want to answer that?
Yeah, fine. We have made our application to the RBI for the chairman. The current chairman's term expires at the end of this calendar year. So we would wait for the RBI to approve the post of the chairman.
Second question I would want to ask regarding your unsecured portfolio, where the growth has been robust. I can see even in the credit card segment, the growth is over 50%. Is there any extended provisioning which you are thinking? What is your thinking there? You want to continue growing like this?
Again, if you look at it, we have grown when I talk about unsecured retail, I'm including credit cards, personal loans, the other unsecured at the retail level, the retail microfinance. So all of that put together as a pot, we will today be at about 11% of our overall advances, which a quarter ago was 10.7. And yes, we've talked about the fact that we are comfortable growing this and taking it to about early to mid-teens. So we are on track there, and we are quite okay with that. As regards provisioning, if I look at my overall unsecured book, the provisioning there is in excess of 85%. So we're pretty much covered there.
Thank you so much.
Thank you, Ankur. Ira, you could ask your question, please.
Good afternoon. Just, a question on the appointment. Many large banks have opted for insiders. It obviously, helps smooth out the transition process. It probably helps keep attrition at a senior management level in check. Now, with an outsider coming in, would investors sort of be nervous? Are you nervous about larger attrition levels, particularly at the mid to senior management level?
I guess the issue is not really about attrition. The issue really is about getting global talent, which is driven by technology, driven by customer experience, given by changes which are happening in the banking environment globally, and ensuring that in India we run around similar themes. And if you see, I use the word ghar wapsi. All of these are Indians who made a mark and made a difference on the global arena, both on the consumer side and the non-consumer side. And we are very confident that they will, over a period of time, make that difference even out of our country.
Mr. Manian and Ms. Ekambram's post, do they continue as it is right now? Is there any change in their roles?
No, there is no change at this point of time, really, no. They continue to be on the board and they continue in their roles.
Thank you, Ira. We'll come back to you. Gopika, you can ask your questions, please. Gopika, you there? I think Gopika is facing some technical difficulties. Ajay Ramanathan, you can continue.
Hi, am I audible?
Yes, please. You are. Yes.
Sir. So I just had one question. The other income has fallen on a sequential basis, which bottom line is also lower. So what has led to this?
Ajay, you're not very clear. If you can just repeat your question, please.
Yeah. So basically, my question is that the other income has fallen sequentially. And due to this, I see that on a standalone basis, the bottom line is also lower sequentially. So what has led to the fall in other income? I see that in the column in fees, apart from fees and services, there is a sharp fall in the others.
Yeah, Jaymin, you want to take that?
I'll explain that.
Yes.
So Ajay, if you look at it, I talked about it. One is in quarter one, the bank standalone gets subsidiary dividends from its subsidiaries. So that contributed in excess of 300 crores in Q1. That is zero in the current quarter. So if you actually look at the tables for the last quarter, after giving all the details about the individual company, we will have a dividend adjustment towards the bottom.
Well, that was the Kotak Mahindra Bank management addressing the media, but we now have ICICI Bank's numbers, which have just come out a few minutes back, with both the net profit and the net interest income above what our poll had suggested. The net profit coming in at 10,261 crore rupees, which is higher by almost 36% compared to the same period last year, and the net interest income growing by almost 24% year on year at 18,308 crore rupees. The net NPA has come down marginally, as has the gross NPA. We have Abhishek Kothari with us again to analyze these numbers. Abhishek, your first reading of the numbers that have just been delivered by ICICI Bank.
Well, fantastic set of numbers are coming in from ICICI Bank. To begin with, the business momentum has been pretty robust. If you take a look, deposit growth is at 10-quarter high of about 18.8% YOY. Sequential deposit growth is at 4.5%. Advances growth is at 18.3% YOY, and sequentially it's at 5% quarter-on-quarter growth. So that is a 6-quarter high, which means that the incremental CD ratio is at 3-quarter high of about 94.5%. However, what has also worked is that the analyst estimate was about 25 basis point decline in net interest margin, and net interest margin has declined by 25 basis point to about 4.53%. The NII is ahead of our poll, 18,308 crores versus our poll of 18,246 crores. PAT is at 10,261 crores. We are working with a number of 9,513 crores, but just to highlight our viewers, the provisions are on the lower side. So provision decline has aided the PAT this time around. Operationally, operating profit growth on a sequential basis was less than 1%. Not taking away from the fact that asset quality continues to be impressive for ICICI Bank despite the high share of unsecured portfolio. Unsecured portfolio is almost 19-20% of their book. And take a look at the slippages. The annualized slippage ratio of 1.69% is perhaps one of the lowest that you are seeing in last 11 quarters for ICICI Bank. And their asset quality continues to improve. Gross NPA ratio is down to 2.48% when compared to 2.76%. Net NPA ratio is down to 0.43%. Versus 0.43 in the previous quarter. Another heartening point to see in the result is the ROA, the return on asset. While for other banks it's declining due to net interest margin, for ICICI Bank it's at all-time high quarterly ROA of 2.41%. So strong set of numbers coming in from ICICI Bank with business momentum remaining really strong. Operationally, slight weakness, but lower provisions have aided the PAT this time around. Back to you.
Well, thank you very much, Abhishek, for taking us through those numbers. We do have guests joining us as well. We still have with us Rahul Malani of Sher Khan, and Prakash Diwan is also with us. Prakash, your first reading of ICICI Bank numbers, it's a solid set of numbers, but the margin dip, do you think that's, how will the street take that?
No, absolutely. I think I could sense the excitement in Abhishek's voice looking at these numbers. Because they're far beyond, positively beyond expectation. Especially profit, including NII. So on all counts, it's definitely a beat. The whole thing was that while we were expecting asset quality to, was always a bit of an area that you needed to look at. That also is kind of not really something which is disappointing at all. So, in fact, my guess was that gross NPAs could probably be 2.9 or 9 or probably even higher. And even that net NPA of 0.43 is absolutely less than what most of us had expected at 0.5, 0.52. So I think the concerns on NIMs shrinking because of higher costs and all of that, which was 15-20 basis points, was par for the course. And given the fact that they've been able to grow on retail SAB segments, is my guess, especially on the revenue side, and that's why it's such a stupendous number. Will definitely be very welcomed by the street. So I don't find any the same. Now the challenge is to understand the management how they would explain the rising operating expenditure going forward. for the bank. So that's the only thing, because to keep credit growth at this pace competitively, you definitely end up incurring higher operating costs. So what's the plan there is what needs to be understood. But otherwise, most of these numbers seem to be absolutely far better than expectations.
Well, Prakash, what you mentioned is that the higher OPEX, what I've been seeing and I've been highlighting to viewers as well, is that, large private banks or some of the mid-private banks have also started to pick up on, branch expansion after looking at SDFC Bank. So they have been capturing, the market share away from PSU banks. For PSU banks, it's declining, the number of branches, while for private banks, the number of branches is increasing. And look at that, it's actually translating into business momentum for you. 4.5% sequential deposit growth and about 5% loan growth on a sequential basis. Just one point that I would like your view is the net interest margin. We have seen Q1 FY21 to Q1 FY23 or Q3 FY23. Some of the banks did not raise their deposit rates, or did not raise that much of deposit into the balance sheet to actual augur for growth going ahead. Now they are facing the heat in terms of net interest margin. Look at Kotak Bank, incremental, liabilities are coming at huge cost. Even for ICICI Bank, unlike SDFC Bank had been seeing deposit momentum all time around. They were shoring up deposits. So do you differentiate that, the leader versus the other pack in terms of deposit momentum? And how long do you expect, net interest margin to actually bottom out for the likes of ICICI or Kotak?
So that's a very, very important point, because numbers are, you look at numbers with more of hindsight. So going forward, what is it? And I think the biggest challenge is going to be on cost of the funds and the NIM impact thereon. So I think I would give it at least another quarter for NIMs to kind of start stabilizing and moving upwards, because that shrinkage that you are seeing because of higher cost of funds is across the board. And where the likes of ICICI or Kotak, or when we see next Friday, Axis numbers also will be a similar picture, is they are scoring by growing faster than an HDFC Bank. So what they're trying to do is they're trying to pass on the higher costs to the borrowers, while maintaining the quality as the GNPA and net NPA numbers indicate. So I think that's where the dependence on wholesale deposits has been far bigger than the deposit retail mobilization. So that's where they will have to kind of keep themselves at a higher pace, growing at a higher pace. But I would believe that would be a factor to watch even for one more quarter, not just this quarter, but you could probably see that reflect at least for sure till December, if not till March.
And Rahul, what is your reading of the numbers? And of course, on the margin front, we've been seeing this impact of the repricing of deposits across the banking system so far. But still, given what HDFC Bank is going through after that merger, you think it will be advantage ICICI Bank for a while?
So basically, the biggest surprise has come in the result, as if you look at the net slippages are just at 116 crore. That is why if you look at the credit cost is much lower. And overall, if you look at the recoveries have been very, very strong sequentially also. And in terms of slippages are also very lower compared to sequential basis. So in terms of margins, we believe that in next 2 quarters, pressure would be seen, because if we look at the system growth is around 20%. So and deposit growth is at around 13%. So in order to narrow that gap, there would be certainly pressure on the cost of deposits. Real rate would inch up more likely in H2 of FY24. So we believe that sometimes at least in the first quarter of FY25, we expect a cost of deposits to top out.
Okay, gentlemen, since we have you, Prakash, if I could also get your reaction, going back to Kotak Mahindra Bank's new CEO announcement, is the street going to take this well, that an external candidate has now been named the new CEO? Because, largely you see continuity with, internal members being elevated to CEO positions, lower attritions and so on. So how will the street look at this new appointment, even though, Uday Kotak calls it a ghar wapsi.
It kind of makes up for an interesting, unraveling of who would that be, and given the fact that even when the current makeshift arrangement was made, it was very clearly told to everybody that this is just till we finalize the candidate eventually. So I think from that perspective, while you might see a bit of a compromise on continuity, but somebody external can always come with a new set of with a little bit of a renewed vigor to reset the bank's growth chart. They have been they've been doing things which are very sideways, making them go very sideways from the mainstream activity of other banks like Axis and ICICI, and to some extent the smaller ones like Indus and all. So Kotak will have to reinvent itself, and for that an external CEO, in my view, is definitely a very good step. I don't think the market will get disappointed, though, as they would have preferred a known name within the setup was always good for continuity. But the need of the hour for the bank is to revitalize itself, relook at how things are doing. And from that perspective, this will probably be a very good, it's as simple as that. He's been, Mr. Vaswani has been part of the setup, and familiarity-wise, it would not take him too long to get ingrained into the system and stuff like that. So that's the advantage. But I think the market will probably like this.
Okay, a good bet for the bank when it's trying to reinvent itself, bringing in an outsider. Thank you very much for that perspective, Prakash Diwan, and also Rahul Malani, for sharing your thoughts with us, helping us read through some of these big numbers that have just come in. On that note, we're going to thank our guests and we're going to take a short break. We have more numbers to look at after this very short interval. Welcome back to our show where we're covering some of the big banking earnings that have come out. We spoke about ICICI Bank and Kotak Mahindra Bank. RBL Bank also came out with a strong set of numbers for the second quarter. It saw its profits rising 46% on an annual basis, with asset quality also showing some improvement. Abhishek is back with us to take us through the highlight of RBL Bank's numbers. Abhishek, what were the highlights, and if you could take us through that reclassification that the management has done and how that impacted the numbers?
The reclassification is a one-off and not comparable. So, let's leave that to what the management has done. Now, RBL Bank has done a strong quarter. On a like-to-like basis, the net interest margin has actually improved to 4.89% when compared to 4.84% in the previous quarter and about 4.5% in the same quarter last year. Now, take this number very nicely given the fact that the deposit growth has been higher than that of the loan growth. So, with the deposit growth coming in at a price, they are able to improve their net interest margin on a sequential basis. You're not seeing that for the likes of Kotak Bank or even ICICI Bank or Yes Bank, who have given results today. With one-off change, the net interest margin is at 5.54%. Now, another good part is that their operating efficiency has improved, although it remains elevated. Cost-to-income ratio is at 6-quarter low, and slippages at 541 crore with an annualized slippage ratio of 2.84%. This is one of the lowest annualized slippage ratio that I am seeing for RBL Bank in last 12 quarters, or let's say 3 years. Asset quality, they continue to improve. X of Q3 FY21, which was a dispensation quarter from the RBI, gross NPA ratio is at 16-quarter low, net NPA ratio is at 16-quarter low. Gross NPA ratio has come in at 3.12% and net NPA about 0.78%. Now, return ratios, they are one of the best that you are seeing in last 15-16 quarters. ROA at 1%, ROE of about 8.39%. RWA to advances ratio is at 14-quarter low, which means that the balance sheet is becoming less riskier, and there is growth coming in from secured portfolio or lower risk portfolio. So RWA to advances remains on the higher side in the industry, but it's on a declining trend. It's now at 117.2%. CASA ratio on the flip side is one of the lowest that you are seeing in last 6 quarters, coming in at 35.7% when compared to 36.6% in the previous quarter. But that's a trend that you are seeing across industry. People like you, me, common man, everyone is actually moving their money from low-cost deposit, that is saving account, to term deposit for better rate, and that is hurting all the banks. P&L, both, they have actually made changes, so I cannot compare a like-to-like basis with my poll. However, NII is at 1,475 crore. We are working with a number of 1,285 crore. Their PAT is at 294 crore, and that's a comparable number with our poll of 267 crore. So a PAT is a beat on our poll. Back to you.
Well, that's as far as RBL Bank is concerned. But Abhishek, you've also been going over Yes Bank's numbers. Those weren't as good. I mean, they were below what the poll had thrown up.
Operational weakness is seen in the numbers of Yes Bank, and the numbers are way below our poll. So the gross NPA remains flat, 2% quarter on quarter. It's the same 2% in the previous quarter as well. Net NPA has improved a bit to 0.9% versus 1% in the previous quarter. The NII is actually declined by 3.3% YOY and about 3.7% quarter on quarter, which has meant that the net interest margin is at 8-quarter low of 2.3%, which compares to about 2.5% in the previous quarter and about 2.6% in the same quarter last year. Cost to income ratio is at 5-quarter high and one of the highest in the industry, or one of the worst in the industry, at 74.4%. Annualized credit cost is at 9-quarter high of 1.47% when compared to 0.63% in the previous quarter. The PAT has come in at 225 crore, which is a decline of 34.25% sequentially. 19 quarters that you are seeing their return ratios remain really weak, with ROA of less than 0.5% and ROE less than 5%. In terms of P&L versus our poll, both are below our poll. NII is at 1925 crore. We are working with a number of 1,965 crores. PAT has come in at 225 crore. We are working with a number close to 350 crore. So operational weakness is seen in the numbers of Yes Bank. Back to you.
Well, that's as far as RBL Bank and Yes Bank numbers are concerned. Thanks very much, Abhishek, for taking us through the fine print of that. Stay with us. We also have guests joining in to look at these numbers further. Darpan Shah from Haitong Securities India is with us, as is Ashutosh Mishra from Ashika Stockbroking. Ashutosh, quickly your thoughts. Let's start with Yes Bank, for instance. The numbers operationally weak, but it's one of the few banks apart from Kotak Mahindra Bank that's actually highlighted some initial risk that is starting to build up in the unsecured portfolio. What do you make of that in the numbers?
So yes, there is already regulators as well as multiple industry watchers are clearly indicating that at the retail level there is some risk is getting emerged out there. We need to little bit vigilant about this part of it, and probably few other banks who have a relatively higher unsecured portfolio, especially unsecured personal loan portfolio. There we need to see how the credit cost trend is going to change, and especially credit cost is the lowest at this point of time in the recent history. So any change in that can have a material impact on the earning from the future perspective.
And Ashutosh, what did you make of the RBL Bank numbers? We also heard from the management there, not much when it comes to the unsecured retail portfolio, but they're confident that, at least on margin front, unlike other banks, they may not be affected as much.
Yes, they have seen from last at least 4 quarters, they are continuously showing improvement in the performance. Especially new management has done a lot of good job out there, and on bringing also down some of their low-yielding portfolio, low-yielding corporate portfolio, and increasing the proportion of high-yielding retail portfolio, which they are continuously working on. But here also we need to keep in mind is that RBL Bank is also having a relatively higher exposure to some of the unsecured loan portfolio. So the important is to watch how that portfolio perform for the banks going forward from here.
Okay, Darpan Shah is also with us. Darpan, earlier we were talking about the ICICI Bank numbers and the Kotak Mahindra Bank numbers. A quick word on, the new CEO appointment for Kotak, what you made of that, and the numbers as well.
Okay, so firstly on number trends, pretty much in line with our estimates, at least, where PAT has been grown on a sequential basis and NII is largely flat on a sequential basis. This is predominantly to do with a sharp NIM compression of almost 35 basis points, which they have seen during the quarter. In terms of the new CEO which has been appointed, it looks like a very credible CEO which has been appointed, having a global experience, vast experience in the banking sector across geographies. So I think that should be looked as a positive for.
Well, Darpan, if I take a look at Kotak Mahindra's deposit growth, per se, Q1 FY21 to Q3 FY23, the deposit growth has been anywhere between 6% to 13% kind of a range. So they have not actually showed up deposits that you saw with the likes of HDFC Bank. So the margin compression is actually on the higher side, right? If I'm able to understand that correctly, that over the last 2-3 quarters is when they started showing up deposits, and their CD ratio is now at comforting levels. Do you see any, a material change in your, forecast for FY24, or let's say over the next 12 months with respect to net interest margin? And how do you see the valuation of Kotak Bank?
Okay, so a couple of questions here. So first on the margin front, definitely the compression is higher compared to the similar kind of a large peers which are there, and understandably so, because Kotak has a significant proportion of the floating rate book. So they had seen a steep rise, and that's how they are seeing a steep fall as well. In terms of valuations, it has become very much attractive, we believe. If you see, there has been a significant de-rating for the stock over the last couple of years. And it's current, as per our estimates, on a standalone book, X of subsidiaries, it's trading roughly around at 2x FY25, which we believe, for the kind of asset franchise which they have, for the kind of liability franchise which they have, and inherent quality perspective which they have, looks attractive at current levels of 2x.
Darpan, you spoke about the subsidiaries. If I take a look, the quarterly PAT of subsidiaries is perhaps at an all-time high. So the subsidiaries have also started to fire, and with this
17.59%. Moving on to deposit growth. The total period end deposit increased by 18.8% year-on-year to 12,94,742 crore rupees at September 30th, 2023. Period end term deposits increased by 31.8% year-on-year to 7,67,112 crore rupees at September 30th, 2023. Period end term deposit increased by 64,601 crore rupees in Q2 2024. The average current account deposit increased by 14% year-on-year. The average savings account deposit increased by 4.5% year-on-year. The bank opened 174 branches in the current quarter, 634 branches in the last 12 months, and a network of 6,248 branches and 16,927 ATMs and cash recycling machines as at September 30th, 2023. We added about 4,000 employees in Q2 2024 and about 29,000 employees in the last 12 months and have about 1,39,000 employees at September 30th, 2023. Moving to loan growth. The domestic loan growth grew by 19.3% year-on-year and 4.8% sequentially at September 30th. The retail loan portfolio grew by 21.4% year-on-year and 5.5% sequentially. Including non-fund outstanding, the retail loan portfolio was 46% of our total portfolio. The business banking portfolio grew by 30.3% year-on-year and 10.6% sequentially. The SME business, comprising borrowers with a turnover of less than 250 crore rupees, grew by 29.4% year-on-year and 7.2% sequentially. The rural portfolio grew by 17.3% year-on-year and 3.5% sequentially. Growth in the domestic corporate portfolio was 15.3% year-on-year and 3.1% sequentially at September 30th, 2023. 71.3% of the total portfolio, excluding retail and rural, was rated A- and above at September 30th, 2023. Moving on to our digital initiative. Leveraging digital and technology across business is a key element of our strategy of growing the risk-calibrated core operating profit. We continue to see increasing adoption and usage of our digital platforms by our customers. There have been more than 1 crore activation of iMobile Pay by non-ICICI Bank account customers at end September 2023. The Merchant Stack offers an array of banking and value-added services to retailers, online businesses, and large e-commerce firms such as digital current account opening, instant overdraft facilities based on point-of-sale transactions, connected banking services, and digital store management, among others. The value of the bank's merchant acquiring transactions through UPI grew by 69.5% year-on-year and 13.9% sequentially at 2024. The bank had a market share of about 30% by value in the electronic toll collections through FASTag in Q4, with a 15.4% year-on-year growth in collections. The bank has created more than 20 industry-specific stacks which provide bespoke and purpose-based digital solutions to corporate clients and their ecosystems. The bank's Trade Online and Trade Emerge platforms allow customers to perform most of their trade finance and foreign exchange transactions digitally. Bank's digital solutions integrate the export transaction lifetime with bespoke solutions providing frictionless experience to our clients and simplify customer journeys. During the quarter, ICICI Bank participated in the industry-first trade finance transactions using blockchain-powered technology by transforming the time-consuming, paper-intensive cross-border trade in a real-time electronic bill of lading in a trusted and secure environment. About 71% of the trade transactions were done digitally in Q2 2024. The volume of transactions done through Trade Online and Trade Emerge platforms has grown by about 30% during the year. Moving on to asset quality, the net NPA ratio was 0.43% at September 30th compared to 0.48% as at June 30th and 0.61% at September 30th, 2022. During Q2 2024, there were net additions to gross NPAs of 116 crore rupees. The gross NPA additions were 4,687 crore rupees in Q2 2024. Recoveries and upgrade of NPAs, excluding write-offs and sale, were 4,571 crore rupees in Q2 2024. The gross NPAs written off were 1,922 crore rupees in Q2 2024. There was sale of NPA worth 179 crore rupees in the current quarter. The provisioning coverage ratio of an NPAs was 82% at September 30th, 2023. The total fund base outstanding to all borrowers under resolution as per various extent regulations declined to 3,536 crore rupees or 0.3% of total advances at September 30th, 2023 from 3,946 crore rupees at June 30th, 2023. The bank holds provisions amounting to 1,107 crore rupees against these borrowers under resolutions as of September 30th, 2023. The loan and non-fund based outstanding to performing borrowers rated BB and below were 4,789 crore rupees at September 30th, 2023 compared to 4,276 crore rupees at June 30th, 2023. Total provisions during the quarter were 583 crore rupees or 4.1% of core operating profit and 0.2% of average advances. The bank continues to hold contingency provisions of 13,100 crore rupees at September 30th, 2023. Going forward, we will continue to operate with a strategic framework while focusing on micro markets and ecosystems. The principles of return of capital, fair to customer, fair to bank, and one bank, one team ROE will guide our operations. We focus on building a culture where every employee in the bank treats customers with humility and upholds the value of brand ICICI.
All right, that was Sandeep Batra, the Executive Director at ICICI Bank, briefing the media about the second quarter earnings. A stellar set of earnings at that. There was a slight increase in the BB and below book, and that was because of one account, being upgraded, to a non-performing status during the quarter. But aside from that, of course, on the margins as well, the decline is perhaps better than what was expected. Profit growth strong as well, net interest income growth strong, and strong advances growth. So that is as far as ICICI Bank is concerned. On that note, we're going to wrap up this coverage of earnings on this special bulletin. Don't go anywhere. The news and updates will continue right here on CNBC-TV18.